If people come to us and say, Darius and Carmen, I want to do infinite banking with you, but I don't want the death benefit, we already know that you don't understand the concept. My name is Carmen.
And I'm Darius. And after a decade in this industry, what we've learned is that people don't actually want infinite banking. What they really want is relief.
So by the end of this video, you will understand our updated and elevated perspective as far as infinite banking is concerned, because after being in the industry for over a decade and working with thousands of families and creating thousands of policies, we need to make sure that you understand the true concept of this concept.
Here's the thing. People come to us and say, I want to be my own bank because I want to control my own money. Well, the question that we then have is, why don't you control your money now? Because a policy ain't going to change anything. It's going to give you more of what you already have. So here's the pattern that we see.
I feel like we need to run that all the way back to make sure that the people all the way in the back heard what you had. The main question is, why did you get control of your money now?
And here's the pattern that we see day in and day out when we initially have conversations with people that say they want to control their money, is the fact that income comes in, bills go out, unexpected expenses happen, savings gets drained, and then the cycle starts again. It's a never-ending cycle that continues to repeat itself over and over again. So that's not actually a banking problem. That's a cash flow control problem.
Meaning you don't have control over your income.
Right.
Fancy words, but what we're really saying is when your income comes in, the problem is what happens when you get access to it.
And the thing we teach at Wealth Nation is control of your money starts with cash flow control.
Ding, ding, ding. Now let's talk about the misconception as far as infinite banking is concerned, because people tell us, I just want the cash value. I don't care about the death benefit. I just want to use my policy loans like the banks, which is fine. But the problem that we really want to make sure that we clear up is that when you just want policy loans, access to cash, and are thinking about all the borrowing strategies, you're overlooking the foundation, which is insurance in the first place, right? We're talking about whole life insurance. Out of those three words, what did you hear? Whole life insurance, right? So we want to make sure that you don't underestimate the asset in which life insurance is, right? And before we go any further, I just want to make sure that we address this, right? Because if you've been watching our channel for however long we've been on YouTube, we talk about cash value, we talk about policy loans, and that's intentional, right? We want to juice you guys up because the point is we want you to recognize that life insurance, whole life insurance specifically, is an asset that you can utilize while you're living. Because previous to our understanding of this, we just thought that we could only get term insurance and put it on a shelf, and we never got access to use it. So the reason why we have this educational channel is to show you, again, that you can use your policies. But the key is we want to make sure that you use your policies responsibly, right? Because if you're overlooking the death benefit, you're just getting cash, you're borrowing the policy and never intending on paying it back. We never said that. Right? That's where you guys started coloring outside the line. So that's why we wanted to make sure that we pull back this information and we make sure that we're all on the same page.
Right. And to your point, like, yes, you don't have to pay the loan back, but you should.
You do have to pay the loan back.
Just because you have the option doesn't mean that you'll exploit it. Yes, that's what Carmen's trying to say.
Yeah.
And some of the things like that we had conversations about, it's been exploited, but not to the benefit of the individual. It's to the detriment of yourself and your family that you pass away and leave behind, because the foundation is death benefit. And a matter of fact, the infinite banking concept was started by R. Nelson Nash in the book Becoming Your Own Banker. He's the author of the book, but he emphasized long-term capitalization through insurance, not short-term borrowing.
And going back to this whole process, I want to make sure that I expand on what you were saying, right? Because if we get a loan from our policy and we don't pay it back, guess what happens? We're going to accrue interest. And then guess what happens if we pass away? Now that amount of money is deducted from the death benefit, and that's even less money that we're able to leave our family. And that's less money anyway because we didn't prioritize death benefit from the beginning. So you kind of see where we're going with this?
Right. And then the idea of you want to have the least amount of death benefit. The death benefit is the foundation. And if you remove the death benefit, you actually remove what the whole policy contract is built on. It's like, as an example, if you want a rental income, but you don't want to own the property, that's the same thing with the insurance companies is like, you can't have the cash value without the death benefit. You can't have the rental income without the property.
And as we were alluding to before, this is how infinite banking can be worse. Let me walk you through it, right? It's because if your income is already unstable, you purchase a life insurance policy, then an unexpected expense comes up, and guess what? You go, oh, I got some cash value in my policy. Let me get a loan from the life insurance company, right? You get your loan to solve the problem, which was that unexpected expense. But guess what? You really didn't solve the problem because now you have a loan with interest with a clock ticking that you have to pay back, right? So as we said before, policy loans are going to accrue. And the whole point is you eventually have to repay those loans in order to preserve the policy performance.
Right. And you know what? Here's the experience that we had. Though a few years ago, what we did is we did an illustration on how we paid off our credit card debt.
Yeah.
And the thing is, well, we had $120,000 of credit card debt. But here's the thing, we solved the problem by stop using the credit cards. We no longer use the credit cards.
There's that.
What people get from that video is the fact that we used our life insurance policies to buy our debt, and now we don't have any credit card debt. Well, the thing is, people continue to use the credit cards, and that doesn't solve the problem. You have to solve the problem first. And the problem that we solve first is we stop using the credit cards.
Yeah, we stop subscribing to the consumer debt notion. So a policy loan obviously is going to just make your finances unstable if you don't have a solid foundation with controlling your cash flow before you even get into this concept to begin with.
Right. And this concept of infinite banking is not a rescue plan.
So let's on the positive side, shall we? Let's flip the script and talk about who infinite banking is actually for. All right. So who this is for people with stable income,
Not living paycheck to paycheck.
disposable income,
Surplus cash flow.
existing savings. Bet you're going to say something. Financial discipline and desire for long-term capital control. We'll put those back on the screen so we make sure that we're all on the same page.
So infinite banking works best for people that already have financial stability and want to improve their capital efficiency. So it's not about getting ahead. It's about accelerating once you're already in motion.
Now let's address the role of the death benefit family, because we need to make sure that you understand this ideology. When people come to us and say, Carmen and Darius, I just want the cash value, I don't want the death benefit, but you just told me you have children, you have a spouse, and you have dependents who are dependent on your income, then my question to you is, why doesn't the death benefit matter?
Right.
Think about that for a moment. Hold on, pause. Think about that for a moment, right? Why doesn't the death benefit matter? Because guess what? If you pass away, how are those dependents going to continue living without your income, right? And the other feature of the life insurance death benefit is that it passes tax-free to your beneficiaries.
So I think it's all about perspective, because I know the difference in conversation for us 5 years ago, but versus the conversation we have now is the fact that we've experienced people that pass away and had life insurance policies. Our daughter, she passed away and she had a life insurance policy, and we were the beneficiary of that death benefit. And that it doesn't change the fact that we lost our daughter and we were grieving, but one thing we didn't have to worry about is finances. And for the families that we've seen that didn't have life insurance, and not only did he have to grieve, but he also had to figure out how they're going to pay for things moving forward, was an aha moment for us, because the bills don't stop. Mortgage still continues to be due. Car notes still continue to be due. There's still life there's still life that's had after someone passes away.
I was just laughing because you hear your little southern twang, to be due. So what Darius is...
I try to edit those out in these videos.
So the thing about the cash value, right, is the cash value is great while you're living, but the death benefit really puts the period at the end of the sentence. It like finishes the mission. Okay. And again, what we talk about at Wealth Nation is you're the number one asset, family. You are, right? And so your policies need to protect the number one asset.
Right. So here's the hierarchy of when policy loans should happen. And a lot of people start with borrow money.
That's it. That's the end of the story.
But what the real order is the fact that you need to protect the human value, the number one asset, which is yourself. You need to control your cash flow. You need to build savings discipline. You need to accumulate capital. And then number 5 is to leverage your policy loans. Most people want to skip steps 1 through 4 and go straight to 5, but it doesn't happen like that. It doesn't happen like that in your best interests.
So as we move forward and we think about this whole infinite banking concept, the evolution that we want to make sure that you all are aware of is this is not about hacks. This is not about quick access. This is not about shortcuts, right? What this should only be about is discipline. First and foremost, it should be about controlling your income. It should be about protecting your family, and it should be about generational planning, right? We're not going to generational plan on $2. Let's just talk about that, okay? So at Wealth Nation, what we want to make sure that we can do is make sure that you understand that infinite banking isn't just about borrowing money. Because guess what? If you tell us that you want to be the bank, how are you going to be the bank with no money and no control of your income that's coming in right now?
Because that's one thing the banks had.
They got your money.
They got your money. They got control of your money. That's why you saying now you don't have control of your money, and you want to be the bank because you're looking at them. They have control. You need to have the same control.
That's correct. So what we want to teach you is about becoming the type of person that always has the money. Okay, so if you want to understand how to have the money, then definitely click on the link below so that we can serve you here at Wealth Nation.
Right, and remember to own your own lifestyle.
Or someone else will.